Hello everyone, this is the pre-market report video for today June 8th in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, Nifty opened a gap up of 66 points which was then followed by a range bound move for a couple of hours. This was predominantly due to Bank Nifty which was trading almost flat in the opening hours. However, in the second half, despite all the European market down, Nifty got the additional push from the HDFC Bank, which made it to pass through 18,700 mark. I mean, 66 points positive opening itself very positive. It was mainly supported by Reliance Industries, as yesterday US EIA mentioned that they expect the oil price to over $80 per barrel in the end of 2023. High oil price is always positive for Reliance, especially at present now since no windfall tax, they can buy cheaper oil from Russia and sell it in the open market. In addition, market was generally very positive by expecting the pause in RBI rate hike today. As we all know, at present in May, India got the consumer inflation of just 4.7%, which was comfortable for RBI's target 6%. Anyway, that's the first half story. In the second half, as I said earlier, HDFC Bank started to support, and in fact, they were the second highest positive contributor in Nifty. I mean, in the HDFC and HDFC Bank merger, there are lots and lots of unclear and confusion there. And one such thing is this HDFC's short-term loans to corporate and realtors. As per present RBI banking rules, banks are not permissible to have such short-term loans. Now, yesterday afternoon, RBI has allowed HDFC to carry forward some of these short-term loans to HDFC Bank after the merger, and HDFC Bank clarified near 90% of these short-term loans will be matured before merger in July and August. So this gives the additional support to the market and help it to break out 17,650 and 17,700. I mean, it's just only 7 stocks out of Nifty 50 that ended the day negative, 2 private bank and Bajaj Finance included. We discussed about the issue in Bajaj Finance yesterday. Other than that, it was really positive. All the sectors including both private and public bank increased yesterday. The advanced decline ratio was almost close to 2:1. So for every one stock that declined yesterday, 2 stocks were advanced. In terms of institution activity, both FII and DII turned as buyers. FII net bought for approximately 1,380 crore rupees, while DII net bought for near 400 crore rupees. And one more thing, yesterday Indian market was positive. Other than that, Japan, China and Europe all closed either flat or negative. Moving to US market, the story there was not so different last night compared to day before yesterday, but the results were. I mean, as I said yesterday, at present US market is kind of being in the waiting game for its May month inflation and interest rate decision, since S&P 500 increased around 20% since its October low. Generally, as a rule of thumb, as per technical, if anything moves above 20%, then it will be very bullish for any index or stock. But here, because of this uncertainty around the macro, investors are really nervous. Thus, last night, again, most of the stocks moved only based on its own fundamentals or news. For example, here please have a look at the tech stocks. If required, please pause it. Some closed positive and some closed negative, especially the index heavyweight, Google, Amazon and Facebook. Those 3 really closed negative of 3 to 4%. Each got their own problem that investors don't like. However, I don't want to go in detail, but I will just give you guys the overview. For Amazon, they said like Nifty, they are going to add the ad-based type subscription service for Prime Video. Here, that was positive for Netflix since it did increase their subscribers. But for Amazon, it's not just streaming service, it's also the other Prime benefits like free product delivery, etc. And also, this now raised the question whether Amazon started to lose the subscribers. Moving on, for Facebook in the Wall Street Journal, they published that Instagram algorithm is not differentiating the unsafe content and it itself recommending those. But they also mentioned that they are improving the vigilance by setting up the special squad. Regarding Google, same Wall Street Journal published the another article that Apple Pay is now outgrowing Google Pay and Samsung Pay and will continue in the future as well. So because of this index heavyweight issues, both Nasdaq and S&P 500 closed negative, whereas Dow Jones able to be in the positive region. I mean, it was up by 0.27%, whereas S&P 500 down by 0.38% and Nasdaq decreased by 1.29%. However, surprisingly, US VIX didn't increase. It's same as day before, below 14. And one more worrying thing, 10-year bond yield increased 3% and moved near 3.8%. This is kind of surprise to me, since at present 10-year bond yield will increase only if there will be a visible further rate hike in the future. At present, the Fed probability tool still insisting that over 60% Fed will pause the rate hike next week, which means there is no reason for 10-year bond yield to increase from below 3.7% to 3.8%. So I'm suspecting there is something that retail investors don't know. Moving on, in case of oil, again US crude oil inventories showed that there is a near negative 0.5 million barrels against the addition of over 4 million barrels last week. It means there was increased demand last week, so oil increased by 1%. At the time of this video, WTI crude oil was trading near $72.5 per barrel and Brent crude oil was trading near $77 per barrel. Regarding Indian ADR, banks closed in line with Indian market. HDFC Bank was positive and ICICI Bank negative. However, in Indian market, Infosys increased near 0.8%, but in US it closed flat. Whereas Wipro was positive. Here I am not negative, more of flat to positive. About SGX Nifty, it moved above 18,800 mark and closed at 18,823. Same, expecting flat to positive opening. Yesterday, I saw a question in the comment section, how I am calculating the premium for SGX Nifty. The answer is simple. I mean, different people use different techniques. One way to look is the price of Nifty future and SGX Nifty at the time of Indian market close. What's the average premium value in SGX Nifty and Nifty future to the spot Nifty at 3:30 PM closing time? I hope it's clear. Anyway, in future, not this weekend, but in the next week, I will make one separate video by answering all the market related questions if I know the answer and my opinion. So that's all about the global market. Now let's see the India specific information. First, just for info, in the last 6 months, LIC increased its total stake in Tech Mahindra from 6.87% to 8.88%. I mean, it's not they increased yesterday, they increased over the period of last 6 months. But the shareholding status was reported yesterday. So we might consider this as slight positive since it's not all the LIC invested stocks were always bullish. Next, regarding monsoon, yesterday Indian Meteorological Department IMD released the statement that in the week to June 7, India received only just 9.9 mm rainfall against the normal 23.1 mm. And also worrying thing is that normally monsoon starts in Kerala around June 1st and cover the whole country by mid-July. This year IMD was expecting on June 4th, but it hasn't reached yet. Another not so good news, yesterday Bloomberg released the report about Indian banks. I mean, they released it during the market hours itself, so there is a high chance it might already factored in it, but still it's very important to understand and know. Actually, what they said is, at present, banks in India already started to offer loans at the lower interest rate due to the competitive pressure. Now they believe it will affect the bank's net interest margin. For example, as per their report, the effective interest rates on fresh bank loans made in this 2023 April fell after rising for nearly a year, which is not good, and that is what they are trying to say. But what I believe is, because of this 2000 rupees note deposit in the bank, it's now increasing the total deposit rate in banks. So they have to lend those to pay the interest for the depositors. This will increase the CASA percentage, which is the cheap money to banks. So I'm guessing it won't affect the net interest margin. Here, it's just my opinion, I can be wrong. As a summary, Nasdaq was down over 1% due to the issues around index heavyweight, but the overall market was flat and global momentum was neutral. And same was indicating the SGX Nifty and Indian ADR. So if market opens flat and maintains above 18,700 in the first couple of hours, again we might see some more positive push. Since still some call option open interest are there below 18,600 and also market might be volatile as well. Anyway, we can see those details in the later part of the video. About the things to look out. First, before our market hours, Japanese GDP and its growth rate is due. Then during our market hours, around 10 AM, RBI's interest rate decision. As I said earlier, the expectation is to pause it at 6.5%. Following at 2:30 PM, Europe's employment and GDP data is scheduled to release. Finally, in the aftermarket hours, Fed balance sheet and usual weekly jobless claims are some of the items we need to keep an eye out today. Coming to technical, finally after 5 days of red candle, Nifty forms short green one with short upper and lower shadow with a higher bottom formation, which clearly indicates further uptrend from the current level. Technically, Nifty cleared the important resistance level 18,650, thus it intensified the positive momentum. For the breakout, now 18,650 would be the key support level to watch out, above which the market could rally till 18,800 to 18,875. On the flip side, below 18,650, uptrend would be vulnerable, and below the same, the index could retest the level of 18,600 to 18,550. And one more thing, now the near-term bottom has shifted to 18,400 from the earlier band of 18,000 to 18,200. In case of Bank Nifty, it forms a hanging man pattern, which is not good since it could be reversal. Bank Nifty remained sideways following a positive start. However, the undertone is still bullish, maintaining the support of 44,000 in a spot, where a decent amount of put writing is seen and hurdle is still intact at 44,500. Maybe today after the RBI policy, it might move on either side. So a decisive move 44,500, we might see strong upside. Moving on, for Nifty from option change in open interest, there was a significant call options unwind between 18,500 to 18,650. And good number of new put options added at above 18,600. So based on opening, 18,600 to 18,650 can act as the immediate support. Then from overall options open interest data, still 18,800 got the maximum call options, followed by 18,900. So 18,800 is the immediate resistance and 18,900 is the strong resistance. Then coming to Bank Nifty, based on overall options open interest data, the maximum call option open interest is present at 44,500. So 44,500 is the resistance to break. Regarding put option open interest, 43,500 is the mark that got significant put option without call option open interest. Thus 43,500 is the immediate support. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.